With today's close, the markets have officially changed from bullish to now cautiously bearish. The reason for that? Well, SPY, along with a few of the other index markets, transitioned today in terms of their market stage to more bearish market stages. So that means we need to now put on a little bit more of our cautious glasses, look at some of the more defensive sectors for trade opportunities. For me, those defensive sectors would be XLP, XLU, and XLV, the consumer staples, so think basic necessities everyone wants, utilities, power, which everyone needs, and healthcare, which also everyone needs. Beyond that, if we take a look at which sectors are very clearly bearish, we have here the finance sector, the tech sector, and consumer discretionary. Again, all of which makes sense. Now we need to go digging for opportunities. We need to know that, okay, inside of XLP, XLV, XLU, where do we have long side setups? Simply click on the sector tile, and we can now see that information real time throughout the market day. So for example, inside of the consumer staples sector, we had Procter & Gamble, Coca-Cola, Philip Morris, Mondelez, Pepsi, crude oil, and Monster, all of which gave us a volatility edge. What does that mean? Well, let's take a look at Procter & Gamble for example. I'm going to come into a chart of PG and Procter & Gamble. If I show you where the bot took the trade here, you can see where the actual trade opportunity took place. The first entry, the second entry, and then the exit when price action hits the target line. The setup in all of these is very straightforward. What we're looking for here are strong sectors. So we see XLP, XLU, XLV have this green background. That means they're currently in this market stage of acceleration. If you click on that sector, you can now see the top holdings and see where do we also have that top holding in a market stage of acceleration, meaning agreeing with the sector, and now we can see where we have an edge. So Procter & Gamble, Coca-Cola, Philip Morris all gave you long side setups today, reaching both their daily and their hourly volatility box models. Out of these three, we can see PG and Coca-Cola have a market stage of acceleration, whereas Philip Morris has a market stage of distribution. So Procter & Gamble was a really nice trade here when price action breached our volatility box models, and we're looking for a long side setup, and you see where the entry here took place. We also had Coca-Cola, same idea in Coca-Cola, breaches our volatility box models, and we're now looking for a reversal. Take a look at Philip Morris, which was the one place where the market stage was in distribution, and you'll notice price went a little bit deeper. We broke outside of the aggressive models, this time went to the conservative, but still, we're in line with the sector trend, so we very much still see the buyers come into play. You can see that with the other top holdings as well, but let me show you some other examples. So that was consumer staples. Now let's come into healthcare. Healthcare also had two different examples, United Healthcare and Amgen. These were the two places, if you take a look, which gave you long side setups. Everything else here was short side setups, and we're ignoring them. We're not looking to short an already strong market here with XLV. We're looking for where we have opportunities to join the trend, so long side setups here. If we come into a chart of United Healthcare here to take a look at that trade, for example, United Healthcare breached only its hourly volatility box models. You can see that here, aggressive H. And if we were to load in the hourly volatility box models, you can see where we had the entry inside of United Healthcare here. This was early in the morning when price action breached its hourly models, and we're looking for the long side setup here. So that's UNH. Finally, we have XLU as our last defensive sector. And there we had just one opportunity again. Makes it really easy to find these needles in the haystack. And here we had the opportunity in Exelon. And if we open up a chart of Exelon here, we can see what the models actually look like. Price action early in the morning breached the conservative volatility box models and had a really nice rally to the opposite side. Inside of Exelon, the same thing, daily plus hourly volatility box model breach with the market trend agreeing with the sector direction. So it makes it really easy to find where these opportunities are. Cautiously bearish now means we want to have a little bit more of our foot on the brakes. We want to focus on more of these defensive sectors while they still have this market stage of acceleration, and even start to look at some potentially bearish setups here inside of our key bearish sectors, or at least ones that have transitioned thus far. I hope you found this video helpful in learning how to use our new sector analysis feature to find the needles in the haystacks throughout the market day every single day very easily. Take care, everyone. Good luck trading, and I'll see you in our next update.